Okay, Emily, can you hear me? Can the
Yeah,
audience hear me, you think?
I can hear you. I think
Okay,
probably we can.
well, welcome everybody to our second session that we're having with our Tuesday tips. And I'm Marcia Getting, and I'm the MSU Extension Family Economics Specialist. And I'm delighted you've already had an opportunity to learn from Emily about some of the technological. See, that's why I don't do that kind of stuff. I can't even say the word for Pete's sakes. So we'll start this morning with another enhancement tool, and that one is to just use a poll to get a sense of when did you last take a look at some of your beneficiary designations. And here I'm looking at life insurance, individual retirement accounts, 401ks, etc. So quickly take a look at the poll and tell me if it's been during the last year, 2 to 5 years ago, 6 to 10, or more than 10 years ago. So we'll give you a little bit of time to take a look at that. And then and don't forget to hit submit. When we were practicing, I was always forgetting to hit submit on that. Okay, Emily, what kind of responses do we have today? All right, good, good deal. We've got quite a few of you that have about a third of you in the past year. We've got the same amount that have done within the last 2 to 5. And then we have some that maybe didn't have a chance to answer because I was going too fast. But we'll continue on and have an idea of what is going on in Montana. So thank you for responding to that. Now, as I mentioned, whoops, we don't want to do that. There. The second tool that I'm going to be using, like I did last year or week, was to look at wildflower names as triggers. And the idea of these triggers is to help you remember some of the concepts that I'm taking. And also, it's just fun for me because as you can see from the back of my house, we have wildflowers all over the place. And you know what? I decided if famous people can have their shows at home, I would show you my room of computers and wildflowers. So my disclaimer is the same as last week. No wildflowers were picked, stomped on, or destroyed by me to make these photographs because I find people thought we were picking those and taking them to a studio. No way, we take them in place. Don't forget, you write your questions in the chat panel. That's very important because I want to make sure that we can answer those. And as last week, we will go ahead and stay on for another 30 minutes so that you have a chance to have your question answered. Well, this is my steer's head. And come May, you're going to see some of those if you get to Yellowstone National Park, because that's when they come out. And what I want to do is steer you towards these beneficiary designations that can allow your assets to pass without going through a costly probate. I also want to tell you how you can do the same thing with your real property. You could have $6 million worth of property and you can pass that without going through probate, thanks to our Montana legislature. Now, this is the first flower that I want to share with you. And this was in my early days of wildflowers. And what I did was make a card to send this to a really good friend's mom who had cancer and she wasn't doing well at all. And I thought, I'm going to buck her up. And do you know what I sent her? A mountain death canvas. Ah, I was so embarrassed that I would do something like that. But she wrote me back and she said, hey, we lost 7 sheep in the Lima Mountains because of the death camas. So she had a sense of humor too. But what these mountain death camas make me think about are pods and tods. Now, what's a pod? A pod is a short term for me for talking about payable on death designations. You can make a POD on your accounts at your bank, your credit union, any of your financial institutions there, savings account, checking account, certificates of deposit. And what that means is at death, your ownership is going to pass to your POD beneficiaries. That means it goes to them directly. All they will need is an affidavit of death and a government issued photo ID, and hey, that means no probate. And you can even do a POD on a joint tenancy account. Now, those of you that are out there, you've married, partners, etc., you can say, I want to have it in joint tenancy. So that's what Barb and Jack have done. They've got the wording on their account as Barb Miller and Jack Miller as joint tenants with right of survivorship. And there you go. Now, what they decided to add to that was a POD to their two children. So that means upon the death of both of them, that amount then, or that account, what's in it, will go to the two children, and there's no probate. The other thing about a POD is you can also use it to transfer your checking savings account to your favorite charity or your favorite nonprofit. So I've listed two up here in Eureka because that's where I was supposed to be in March, but because of things that happened, I wasn't there. So these PODs are great. They control the distribution of whatever account that you've got. It goes directly to that beneficiary, and there's no probate. And you change your mind, just go in and make a new beneficiary designation. Now here we have a different kind of flower, and that's called a heart-leafed arnica. Now what we're good at doing is Joe and Brooke. And let me introduce them because they're doing heart-to-heart legacy planning. And Joe, he has heartfelt intentions. He has a $100,000 CD. Woo, I'd like to know Joe. But he has designated Brooke, his sweetheart, as his primary beneficiary. And that's, very nice of Joe to do that. But then later, Joe kind of changes his heartfelt intention. And what he's going to do is write a will. And in that will, he says, I bequeast, my $100,000 CD to my son, Eric Hart. Okay, so this gives us an opportunity for you to participate in a poll, and that's who is going to receive that $100,000. Is it Brooke as the beneficiary, or is it going to be Eric because he was named as the devotee? Now that's a fancy term for a beneficiary, but that's what they do with wills. So Eric is the devotee, but the will was written most recently. So here you have a choice of A or B, and that means you have a 50% chance of being right. So tell us in the poll who is going to receive that property. Okay, Emily, I think probably everybody's answered that's going to answer. What are our responses today? Okay, I'm going to move the slide over just a little bit so I can see the percentage. So I've got 39% of you that are saying Brooke, the POD beneficiary, and you are the ones that are correct. Now we've also got 32% of you that thought Eric would get it. And that's the reason I asked that question, because we've got a lot of people out there that think that they can write a will and undo a beneficiary designation, and you can't do that. So it is Brooke. And if you think about that, well, gee, what should Joe do? Well, Brooke is going to get it. And we know that because the beneficiary form is a contract. And we can change that contract by making a new beneficiary designation. So what Joe can do is go to his friendly bank, fill out a new POD beneficiary form, and that way he can assure that Eric would receive that. Now, what is it? POD, that gives it to the beneficiary. So under the Montana Uniform Probate Code, you cannot undo a POD beneficiary designation with a will. So keep that in mind. Don't think that you can write a will and undo a joint tenancy or any other kind of beneficiary designation. So my reflection for my heart-leafed arnica is have a heart. Review your beneficiary designations on your checking, savings, certificates of deposit. Okay. Now, if you've got any questions about that, I encourage you to write those in the chat room and we'll make sure that we get those answered later. The mountain death canvas again. My goodness, why would I have it in there twice? Ah, I see. We haven't talked about TODs. Now, a TOD is a transfer on death registration. And that's what we're going to do on our stocks, bonds, and mutual funds. Okay? And that's a transfer on death. And when we do a transfer on death, the TOD beneficiary is the one that's going to make the decision. Am I going to keep this stock or bonds, or am I going to sell stocks or bonds? Okay, so let's look at Granny. Now, this is Granny who bought some stock for $2. You know, that was back in the day. Okay, who knows? It might have been Amazon or Microsoft. Okay, so with the transfer on death designation, she has that stock, and the stock then receives a 2 million, it's worth 2 million at the point that Granny dies. And guess what? Granny has made all of you that are attending today the sole beneficiary of this stock that's worth $2 million. So you have a decision to make. You have inherited this stock and you're trying to decide, am I going to sell the stock or am I going to keep the stock? So let me know in the poll, are you going to sell it or keep it? And I'll give you a little bit of time to think about that. Okay, Emily, let's see what we've got there with our participants. What are they saying about the stock? Okay, I'm taking a look here and I'm finding that only 10% are going to sell it, and we've got 59% that have decided they're going to keep it. So that is an interesting one. Now, I've done this with a live audience, and I wish I could see you guys, because I often ask them, you're going to sell it, and then the rest of the people, is this a good idea? And most of the people there say, no, you don't want to sell it, because if you sell it, you've got a capital gain. And that's why we can advise not selling. It's because of the capital gain. So if we're worried about that, let me assure you that no, there wouldn't be a capital gain. You see, what happens is when we die, anything that we own, whether it be our house, whether it be our stocks, bonds, and mutual funds, all receive what is called a step up in basis. So that means the value is stepped up from Granny's $2 to 2 million. So if you sell it at that $2 million, there is no capital gain. Now, if you keep it for a period of time, and let's say the amount goes up to $2,500,000 and you sell it at that price, well, then the capital gain is the difference between the 2 million and the 2,500,000. So it's a step up in basis. So Granny's stock has been purchased for that $2. It receives a step up in basis to the 2 million. Not bad, huh? And if you sell, then, hey, there's no Montana inheritance tax. There's no federal estate tax. There's no probate fees on that because it was TOD. And there's no capital gain, so no capital gain tax. What a great deal that Granny's given us. But now let's say that what Granny decided to do, oh, I don't want you to have this when I'm dead. Why don't I just give it to you now? So now Granny's going to give you that $2 stock. And what happens when it's gifted is it receives a carryover basis. So the gift, IRS has a term. They say the donor is the person that's giving the gift. The donee is the one that receives it. So the donee has a $2 basis in that stock. So the carryover concept is very important. And that's what you want to think about too. We've got a lot of people out there that are convincing mom and dad, hey, put your house in my name, and hey, that's a good idea. Not realizing that the person that receives the house has the same basis that mom and dad had back in 1950 or so. And we've got the same thing with the stock. So what I did was just calculate this and say, okay, Granny's giving you that stock, and then later on, when it's worth that 2 million, you decide to sell it. Well, there's a federal capital gain of, and I looked at the rates and I didn't go with the high one. I went with the 15%, but that would be 300,000. And then Montana would also have a capital gain tax, and it's kind of complicated, but I estimated it out. And the whole deal is if Granny gave that to you and you then sold it at 2 million, you would have a capital gain tax of $398,000. Woo. So what would your suggestion be to Granny? Well, we could say if we're wanting to make the most economic sense, Granny could keep the stock till she dies and then give it to you. Or maybe Granny just does want to give it to you and you've got more than you would have had anyway, so you could end up paying the tax. So that's my Granny story. The other thing that you can do with the TOD is leave that to a nonprofit, a charity. And here, the Central Montana Foundation, that's the oldest one in the state that's there in Lewistown. And in Emily's County too, there's the Fergus County Council on Aging. So use those TODs. You can control your distribution of stocks, bonds, and mutual funds. And again, you avoid probate fees on the value of what those assets are. So now that you know about pods and TODs, is that something that you would place on your financial accounts? So please tell me yes, no, or that you already have those. And I'll give you about 30 plus seconds to let me know that. Yes, no, or that you already have those. Okay, Emily, let's take a look at this one. I'm very interested in finding out how many people already have pods and TODs. Okay, looks about like half of you do, and 2%, no, wait a minute. Now that you know about them, right, 48% of you are going to put them on. We have already only 19% of our participants today have a pod and a TOD. So that gives you an action that you will be able to take as a result of today's program. Okay, what else can we take a look at? Don't forget, if you have questions about pods and TODs, write them in the chat panel. Now here we have an explorer's gentian, and this is a way that you can transfer real property. Those properties we were talking about earlier were personal property, So what we're talking about now is a TOD, a TODD, and what we can do is transfer that $6 million worth of land and no probate. And you designate a beneficiary, but they have no right to the property until you're gone. They can't use it as collateral for a loan. They can't sell it out from under you. It's yours until you're gone. You file a transfer on death deed with the clerk and recorder in the county where the property is located. So if you have land in Gallatin County, you've got to file here. And if you also have land in Richland County, particularly one of those with a lot of oil, wouldn't that be good? You file in Richland County. And who can be your beneficiary designations? Your spouse, your children, relatives, friends, corporation. All of those can be available. And the same way, you can also recognize your nonprofits with your real property. They can keep it if they want, or they can sell it and then use that money for special projects. So you need to think about a transfer on death deed and whether or not that might be appropriate for the situation that you have. And Extension is working on a transfer on death deed Mont guide. That's our fancy term for a fact sheet. And I'm hoping that's going to be available in the next month. I have my fingers crossed on that one. Now here we have a foxglove, and I want to share some more things about Todd's for you. As a matter of fact, there's some real foxes that we saw a couple of years ago in the Beartooth Mountains. And I just thought they were unbelievably cute. So I want you to outfox the law. And what I want you to think about is, what if a beneficiary that you have designated dies before you do? Think about that. Be foxy. Specify a successor. And that's what Mark has done. Mark has filed and recorded a transfer on death deed. And he's saying, if I die, I want it to go down to Evan, my son. But if Evan dies with me or before me, then I want it to go down to Luke. So Luke is a successor beneficiary, okay? And you don't have to have one. You could have two, for example, or you could have three. It's just totally up to you who you want as your designated beneficiaries. Oh, and the nonprofit. Emily, did you get in here and change that one? I'm surprised she didn't say Fergus County Extension, but that's okay. So outfox the law and make sure that you name a successor designated beneficiary. Now here we have a blue flax, and you've probably seen those alongside the highway. And if you've ever looked closely, maybe they're 2 feet tall and they are a booger to photograph. So I was quite pleased with this one. But I want to introduce Gary Blue and his 2 blue children. Here we have Gary, and we've got Linda Blue and Matt Blue. And what Gary has done is he filed a transfer on death deed, naming his daughter Linda as his designated beneficiary. So we've got Linda, she's the beneficiary. Then what Gary has decided to do is write a will. And now he's going to leave the same exact property to his son, Matt. So you can probably guess what I'm going to ask. Who is going to get that property when Gary Blue passes away? Is it going to be Linda Blue, or is it going to be Matt Blue? Because he was named in the will, and the will was written most recently. So this is another one of those where you have a 50% chance of being right. So is it Linda or is it Matt? And I'll give you some time to answer the question there while I wet my whistle. Okay, Emily, what do we got? What do we have for our participants today? Let's see what percent got that one right. Oh, great. We've got 66% of you that have said Linda, and that means you've got it. What happens is this kind of becomes a contract until another form is filed. So for example, if Gary wanted to then name Matt, he could do that with another beneficiary deed, and that would kick out the other one. So great, you got it right. A transfer on death deed. So Linda gets it all, and can you imagine Thanksgiving or Christmas or Easter getting together? I dare say they're not. So we've got Matt, and what he's doing is singing the blues because he didn't get it. On the other hand, maybe what Gary would decide to do is leave it to the Alzheimer's Association in Montana. And then we would have both Linda and Matt singing the blues. So I'd encourage you to write any questions that you have in the chat panel. Well, my observation for the Lady Slipper is time has really slipped away again this morning. Time flies when you're having fun. And I hope I did steer you towards some beneficiary designations that will allow your financial assets to pass to your heirs without a costly probate. Might as well leave as much to your heirs as you can. And I hope I steered you towards an awareness of how a transfer on death deed could also be a way to leave your real property and not have that go through probate as well. And like last week, if you don't have a memory like this elephant's head, we've got Mont guides available online, and we've got 43 different ones. When we have the transfer on death deed, we'll have 44, and that will be exciting. And don't forget that these are also available at your county extension offices. Okay. Now, Emily is now going to pull up some polls to have you share your thoughts about today's webinar. And don't forget to use that scroll bar on the right-hand side to see some additional questions that might be there. And so while you're doing that, I will go ahead and move on. I think no, maybe I won't. I'll just give you a few seconds here to be responding to that.
So, Marcia, we had some questions come up.
Oh, great.
You
Let's
want me
answer.
to start asking some of those?
Yeah, let's
Okay.
try.
There's actually quite a few. So one of the first one, what about designating a U.S. savings bond on death?
Okay, United States savings bonds are in a class all themselves. You are only allowed to put a POD for one beneficiary. That's all they allow. And if you have old bonds that you still have in your safe deposit box, you will have to send those in and fill out the appropriate forms to have the POD. If you are buying a United States savings bond now, everything is online. So go to the savings bonds, United States savings bonds website, and they have some really good responses on there about how do you go about doing that. But remember, only one name. So if you're wanting to treat your grandchildren equally, you've got to come up with it. You can have one bond for this kid, another bond for another kid. Okay.
Okay, the next question. I have a family trust. I usually put my wife as my primary beneficiary and the family trust as the contingent beneficiary. Is this correct? Should this be on all assets I own? Do I have to fund a family trust, or is naming the trust as a beneficiary sufficient?
Oh boy, this sounds like one where somebody's wanting some legal advice. And I always have to say, I'm not an attorney, so I can't tell you what's best, but let's do some education. If we decide that we want to have a trust that goes into effect upon our death, we refer to that as a testamentary trust. And we'll be doing more with that particular topic in some of our other sessions. But basically, the trust itself can only control what you put in the name of the trust. So if you list your wife first, she gets it. Okay, if you want the trust to be first, then you would list the name of your testamentary trust. So you're saying, I want everything to go into this trust, which means on your certificate of deposit, your POD would be the name of the trust. Okay, so we'll do more on testamentary trusts later. Okay, another question.
Okay, so this one may have been answered, but just for clarification, can you have a second person for POD or TOD in the event that the first person dies the same time I do?
Oh, very good. Very, very good to be thinking. Excellent question, because yes, you can do that. Now, the thing you want to watch though is when you're doing secondaries, just make sure if there's anything that needs to be marked out, I guess, do that. As an example, here's a grandma. She wants to treat her four grandchildren equally. So she had primary, secondary, tertiary, and I call it fourthy area. And what happened was the first one was primary. And she wanted them to be equal. So she didn't mark out 1, 2, 3, and 4. So the first kid got it all, and he didn't share with the other 3 on this life insurance policy. So yeah, you can do that. Just look at the lines and see what the lines mean. Okay, another question.
Okay, before the next question, I just want to remind folks that in that evaluation, if you want to receive weekly reminders about these presentations, you can put your email in that first question, and only Marcia and I will see those. They don't get shared outside of Tuesday tips. You can also put your email in the chat if you've already submitted your polling questions, and nobody else will be able to see your email besides us. But the next question is a transfer on death deed the same as a beneficiary deed?
Ah, very good. You see, Montana had beneficiary deeds up until October 1st of 2019. The legislature then changed the law and made it effective as of October 1. So don't use the beneficiary deed. Unfortunately, we've got some counties that recorded those. And if you have one, it's still good. It's just the legislature decided to change the title. And Emily, I've got a question for you. If people emailed us or gave us their email address last week, they don't need to give it again this week, do they?
Correct. Yep, we have it already if they gave it to us last week.
Yeah, so if you gave it to us last week, we got it. We're trying to get organized on this. Okay, do we have most of the people that have had responded to our questions on the evaluation?
Let me check. And then we have more questions too. There's a lot of questions this week.
I just thought
Okay.
I would get rid of this and share a different slide.
Yes, I do believe it looks like we've got everybody in who wants to be in.
Okay, good. Well, we'll just we'll shut that down and we'll see how we see if I can still move. Yeah. Ah, okay. We did want to remind you that next week we're going to be talking about distributing your personal property. And here's one that we will talk about. We got this beautiful ladle, 1847. I may have to look at that again. And we'll talk about how do you distribute these kinds of things under Montana law. Okay, and then thanks again to Emily for helping out with today. And I would be lost without Emily. And this is Marcia, your co-host. Now, if you haven't had a chance to type your question and you would like to do that verbally, you can raise your hand on your name and Emily will unmute and then you would be able to do it verbally. But it sounds like we've got a lot of them that have written them. So let's see if I have any more answers.
Yeah, okay. So one question, how do I do a POD where the beneficiary is my spouse, but in the event of their death, it goes to our child?
Okay, again, this is not legal advice, this is education. You could name your spouse as the primary, and then you could have your child as the secondary. That would mean if both of you die. But first of all, let's look. Is the property in your name only? Let's say we've got a checking account and it's in your name. Okay, that means you have total control and you want it to go to your husband. Okay, we do that. And then your secondary would be your daughter. But I'm going to propose a different thing. Let's say that your account, however, is in joint tenancy with right of survivorship. Okay, your spouse is already going to be the survivor. So the spouse is going to receive it. And then you POD it to the child. So with the joint tenancy, just keep in mind, you die, spouse receives it, and I'm just going to be nasty and say, oh, the spouse marries that hot looking person down the road, and then it could be that your child wouldn't receive it. So that's where we've got to look at consequences, and those are good questions the attorney should ask you when you're wanting to do something like that is how do you have that property titled? So I hope that was somewhat clear. Emily? Did
Okay,
it make sense?
another question, what about designating to a trust on behalf of a beneficiary with the beneficiary deed? How should that be named?
Okay, getting into legal advice here again, folks. I tell you that something that might help. We have a Mont guide that has designated beneficiaries. I think it's designating beneficiary arrangements. Anyway, Google it, Montana State University. And it has all the different kinds of ways that you can list beneficiaries. Um, on different things like life insurance, how you're going to do a trust, because it makes a difference. Is it a living trust? Is it a testamentary trust? And so with a testamentary trust, we usually leave it to the trustee for the benefit of the beneficiaries. If it's a living trust, typically it's mom and dad or husband and wife. And then they're saying when something happens to both of them, they then want to go down to the children, and maybe it'll be used for education and then dispersed to them. So it depends on the objectives of the individuals.
Okay.
Okay.
The next question, is a successor beneficiary the same as a contingent beneficiary?
Yes, those two different financial institutions use different terminology, or maybe your life insurance would use a different terminology than the bank does. And one of the things you'll run into at the bank is the Multiple Party Accounts Act, which we haven't really got into yet. And we're going to be taking a look at that in a couple of weeks.
Okay, another question. There's a lot this week. So if I have two children, can I put both of their names down as the POD?
Sure. We've, and now I did want to let's look at the age of the children. If they're adult children, let's say you're a grandma and you've got adult children, you can put that, it's in your name, and you could POD to two of them. If you had three kids, you could POD it to the three. And then you could say, but what happens if one of my children should predecease me? You've got to think through. Remember last week we talked about right of representation. Well, would you want that child's children to inherit, or would you want it to go to the remaining two children? So review Dying Without a Will and what that right of representation means, because it's very important that you get that concept if you want to treat and achieve your estate planning goals.
Okay. Next question. My uncle left his Montana land to my aunt in his will. She transferred it to me through a warranty deed for valuable consideration. What is the basis?
Okay, the basis would be at the point in time that you bought it. So if you were working with an accountant at the time, there would have been an establishment of, and I'm assuming here it's not stock, it's just the land. He inherited it. So see, he got a step up basis when his aunt died. Or tell me that again. Who has what here?
So the uncle left his land to the aunt in the will, and then the aunt transferred it to this person through a warranty deed.
Okay, so we got the step up in basis. And then what we would look at then is what was the price increase between the time the aunt had it and it was bought. And I'm going to say you probably paid fair market value, or if not, you took advantage of some of the IRS rules for family. And so your basis is at the point in time that you bought it, because you're buying it, you're not being gifted it for that property. Okay.
Okay, another one. What if a piece of property is not fully paid off and you wish to make a TODD? Also, can you designate a piece of property to 3 beneficiaries?
Yes, if we have some property out there, and a lot of us still owe money on property, right? Okay, the TOD beneficiaries get it. And what we're going to do is we have the three, and it'd be like they inherited it from a will in a way, except we didn't have to go through probate. So the three beneficiaries then are going to take a look at that situation and say, oh my gosh, if we keep this, each of us is going to have to make 1/3 of the payment on this place. Can we afford to do that? And it could be grandma's land and we want to keep it, or it could be mom and dad's, and so they'll have to work that through, or they'll sell it, pay off what is still owed, and then be able to have something then for themselves. So that's a discussion piece. If this is a very important piece of property in the family, then mom and dad might want to look at the possibility of saying, maybe we should have some life insurance that's separate that could be used by the beneficiaries to pay off the loan. So there's some alternatives out there for that.
Okay, another question. My husband and I have joint tenancy for our home. Do we also need to list each other as beneficiaries?
Okay, if you have joint tenancy with right of survivorship on your home, that means just by the way it is worded, joint tenancy with right of survivorship, it means one person dies, the survivor takes all. Now, I would ask you to take a look and make sure you know that it's a joint tenancy, because I do have at my meetings, people say, well, I have a joint tenant in common. And that's different because you can have two people that own property as tenants in common, but that's different because one owns 50% undivided interest and the other owns another 50% undivided interest. So with a tenancy in common, you know, the wife could write a will and the wife says, I want to leave my 50% to my daughter. Okay, so as she dies, it means her daughter and the stepdad, for example, would own that property together. So let's first of all make sure, is it in joint tenancy with right of survivorship? And if so, we could still do a transfer on death deed. We could say those two people could agree and sign the transfer on death deed that they want it to go to the next level. It's just like writing a will. The attorney will say, if these people are deceased, where do you want it to go then? Where do you want it to go in this case? So you think through the same thing with the transfer on death deed. Okay.
Okay, another question. Where do we get a copy of a transfer on deed to file for Montana?
Oh boy. We're working on it. This is one that we're going to make it available through MSU Extension because there was a optional form that was included with the transfer on death deed. So Extension can utilize that. So we will have it on the web. I'm not making promises, but I'm hoping within the next month that we will have the necessary forms and an explanation of things to think through before you just jump into doing one yourself. Still a good idea to have legal advice with something like that. Next question.
So for any of these forms, I know that Extension is working on them, but where do we find them in the meantime, or where's somewhere we could always get them?
Okay, I've had people sort of email me emergency wise saying, I would like to have the information because there's an illness in the family or something like that. And what I've done is send out the drafts. I'm not real comfortable doing that, but I know there are circumstances where people can't wait 2 months, okay? And so if you want to email me and explain, you know, I'd be glad to do that. Once these are available, you will also be able to get them from your local county extension office. And it's just a matter of getting them through the system and we'll be set to go because they've been under review by attorneys. That's done. My co-author teaches at the law school and she's doing the final look-see with it. And I'm like I say, I'm hoping for a month from now. What else, Emily?
Um, what if I have a beneficiary designation on my mutual funds? Do I need to have a TOD?
No, thank you for asking that one because you see, what happened in Montana is we had several of companies that were doing business in our state, and they had the audacity to say, we don't allow beneficiary designations. And our legislature said, if you're going to do business in our state, you have to provide beneficiary designations. So that's the term we use. But if you've already done a beneficiary designation on any mutual funds, stocks, and bonds, you're still okay. It's just the new term is transfer on death registration, but it's still a beneficiary designation. Those people will be able to make that decision. Do they keep it or do they sell it? Okay.
Another question, if I have a transfer on death deed for my real property and then do another one naming a different beneficiary, which one of them is legal?
You know what? I was just discovering I forgot to stop sharing. Hello. Wee. Okay, I was so distracted. Would you read that one to me again, Emily?
Yeah, so if I have a transfer on death deed for my real property and then do another one naming a different beneficiary, which one of them is legal?
Okay, it's always the latest one. So I think that's something we're going to have to keep good records, you know, as we age, we may forget some of those things. And I've already used an example in some of my presentations about that exact situation because we may have dad that was exhibiting some signs of Alzheimer's and forgot. And so he files another one, only leaves it to a different beneficiary. And, you know, that gets to be a concern in a family, and it can also cause some real strife.
Okay, so if the most recent beneficiary contract is the one that is legal, then why does a more recently written will not supersede a POD that was written
Okay,
before?
because you've got two different things there. With a transfer on death deed, it's the same contract or the deed. You've got one, and then you have a more recent one that works. Same way if we have a will, you have an old will, and then you have a new will. It's the most recent one. But the reason it does, it's just law that you can't take a contract and undo it with a will. Those are two different items. And you see, the will doesn't have any impact anyway until it's submitted. Well, if you have beneficiaries, there could be circumstances where a family wouldn't even have to go through probate because they've got PODs, they've got TODs, and a transfer on death deed. So the attorney would look at the will and say, well, there's nothing for it to transfer. And so while you got the will, the only reason we're going to use it is for the separate listing that we're going to talk about next week.
Okay. Another question that's come up, what about keeping a copy of these records in a safe deposit box and then also in the home binder? Or how would you recommend keeping these records?
It's always a good idea to have originals, I think, in a safe deposit box. It's not like we need them overnight necessarily, but to keep a copy at home is a good idea because every now and then you say, well, I wonder what that will says. Well, if you can have a copy at home, you can pull it out. You can even circle or highlight something on the copy that you want to ask the attorney about. You don't want to do that with an original will because any marks that are put on that could mean the judge would just reject it and declare it invalid because the judge doesn't know if you made those changes or if somebody else made the changes.
Okay, that's all the questions I've seen come up so far, unless somebody else has another one or something we need to clarify. I'm not seeing anything else pop up.
Okay, well, it's really been great to have you with us for our second session. And we look forward, Emily and I, to getting to see you again next week, where we're going to look at what does Montana law allow us to do with our personal property. And if you're thinking about, oh, I don't need to know that, hey, I could tell you family stories. In Western Montana, two brothers haven't spoken to one another for now it's 40 years because one brother took the antique gun and the other brother said it was to be mine. I could tell stories all day, and I want to tell you positive things that can happen by your taking some action. So be sure and watch us next week, and I look forward to it. Thank you very much for being here today. Bye.
Thanks, everybody.